Welcome back to the deep dive. Today, we're strapping in for a pretty intense look at the modern fraud scene. We aren't just talking about, annoying spam emails anymore. The lines have really blurred between high finance manipulation on Wall Street
Right.
and the kind of digital scams that hit everyday people. We're doing a deep dive into some highly sophisticated, really coordinated fraud operations.
And the sheer scale, it's almost hard to wrap your head around. Internet crimes are just skyrocketing. We're talking losses over $16 billion in 2024. That's a 33% jump from 2023, a huge leap. So today, our focus is right where the digital world slams into your personal finances. Could be a bad link, could be getting tricked into a terrible investment.
Right. And our mission here for you, the listener, it isn't just about recapping headlines. We want to give you the operational playbook,
Yeah.
how these fraudsters actually work. We're going to unpack exactly how these coordinated schemes function and, maybe most importantly, give you the knowledge to navigate all this noise and hopefully avoid losing money.
Yeah, because the speed at which this is growing should really worry everyone. I mean, the FBI reported an astronomical 300% jump in complaints about stock market fraud, specifically pump and dumps, just comparing 2025 to 2024. When things change that fast, yesterday's advice might already be useless.
Okay, let's tackle that high finance threat first then, the classic pump and dump. Can you walk us through how that traditionally works and then, how it's changing?
Sure. The classic setup is pretty straightforward. Fraudsters quietly buy up a lot of shares in really illiquid, cheap stocks, penny stocks, microcaps, that sort of thing. Then comes the pump. They go hard on promotion emails, old school message boards, chat rooms, anything to whip up excitement among retail investors and artificially boost the price. Then, right at the peak, boom, the dump. They sell all their shares, make a killing, and leave everyone else holding basically worthless stock when it crashes, which it always does.
Okay, so that's the old school. But now we're hearing about ramp and dump schemes. What's the real difference there? You mentioned centralized control.
Yeah, that's the key. The ramp and dump is about the degree of control and coordination. It's not just random groups pushing a stock anymore. Often, it's a single, highly organized criminal group controlling everything, from setting up the company to the hype campaign to the final sell-off. It's like they vertically integrated the fraud process. They rely less on just general market buzz and more on, sophisticated digital tools to build trust fast.
Tell me more about that methodology. The sources really stress this shift towards psychological manipulation. They're not just blasting emails, they're using encrypted apps. Why?
Well, it serves a few purposes. Mainly, it helps them avoid detection and makes jurisdiction tricky. It might start subtly, like an accidental text or
Yeah.
maybe an ad you see on Instagram for some exclusive investment group. Then they immediately try to move you onto encrypted apps, WhatsApp, Telegram, things like that. It feels more private, more personal.
And inside that private chat space, that's where we see these really disturbing tactics emerge, like pig butchering. That term sounds awful.
It is awful and deliberate. Pig butchering is this long-game confidence scheme. It's highly personalized. The scammer isn't just some financial guru. Often they pretend to be a potential romantic interest. They build a relationship, sometimes over weeks, even months. They fatten up the victim with trust, maybe some affection, sometimes even small, fake early investment returns to make it seem legit. They're exploiting loneliness, the desire for connection, all specifically to get control over the victim's money and steer them into that worthless stock they plan to dump.
Wow, that is just incredibly cynical, targeting emotional needs right alongside financial ones. And there's real evidence of these coordinated attacks happening at scale, right?
Oh, absolutely. Big time. Just look at July 2025. There's this one huge operation. Investors lost something like $3.7 billion. It happened when 7 really obscure Chinese penny stocks, listed on NASDAQ no less, just cratered down over 80%. And this was right after a massive social media hype campaign. They're masters at creating that artificial FOMO, that fear of missing out, and then they just vanish once they've dumped the shares.
Okay, so that brings us to the next layer. Why these specific stocks, these foreign microcap companies, what makes them such perfect targets?
It's really a mix of volume and vulnerability. We saw, what was it, 35 small Chinese companies listed in New York in 2024. That's almost double the number of similar U.S. companies listing. And these companies, they often share some risky traits. Market caps usually under $100 million.
Yeah.
Very little public financial data available. And this is critical and extremely limited public float.
Limited public float. We hear that term a lot. For listeners, break that down. Why does it matter if insiders control, say, 80% or 90% of the shares? How does that make it easier to manipulate?
Right, so the public float is just the portion of a company's shares that are actually available for the public, for people like you and me to buy and sell in the open market. Now, if insiders like the company executives and the very early investors hold on to, say, 70, 80, even 90% of all the shares, well, there's very little stock actually trading day to day. This high concentration gives the criminals huge leverage.
Ah, okay. So if the fraudster controls most of the available shares, they only need a relatively small amount of outside money, the victim's money, to drastically inflate the price. Because so few shares are actually moving.
Exactly. It lets them swing the price wildly with comparatively little effort. We saw that with Regencell Bioscience, RGC. That stock surged, wait for it, 82,000% earlier this year. Why? Its CEO controlled 86% of the shares. That kind of control means they can manufacture these unbelievable price spikes, making it almost impossible for regular investors to get out before the crash.
So what are the exchanges like NASDAQ and the regulators doing about this? NASDAQ seems focused on trying to prevent these companies from listing in the first place.
Yeah, NASDAQ is definitely trying to raise the barrier to entry. They've proposed new rules, especially for these foreign, often Chinese firms. Before, the minimum they needed to raise in their IPO, their initial public offering, was just $5 million. The new proposal,
Yeah.
at least $25 million.
Okay, 5 times higher. That's a pretty significant jump. But, I mean, is $25 million really enough to stop a determined, well-funded fraud group? Couldn't they just scrape that together?
That's a fair point. Skepticism is warranted. It probably won't stop everyone.
Yeah.
But the idea is to weed out the truly fly-by-night operations, the ones created solely for the scam. If they can't raise even that level of semi-legitimate capital, they can't list. Plus, NASDAQ is also targeting the stocks already trading at the bottom. They're proposing immediate suspension, then delisting, for any stock that trades below 10 cents for 10 straight days. No more 180-day grace period for these bottom feeder stocks.
Right, dealing with the supply side. But the SEC seems to be taking a different approach, more punitive. Going after the gatekeepers, that sounds like a major shift.
It really is. The SEC has launched this big cross-border task force. And they're not just going after the companies themselves, but the small auditing firms, the law firms, the underwriters, the ones who help these questionable companies get listed. Someone familiar with the strategy actually used the phrase they intend to, quote, crucify the bilge bracket.
Crucify the bilge bracket.
Yeah.
Wow. Okay, who exactly are the bilge bracket firms and why is going after them seen as the key strategy?
The bilge bracket, it's a, well, colorful term for the lesser-known, often lower-quality firms, auditors, underwriters that sort of shepherd these dodgy companies through the listing process. They're the ones who sign off on the financials, provide that veneer of legitimacy. The SEC's thinking is pretty straightforward. And if you hit these intermediaries hard think, big fines, suspensions, maybe even criminal charges, you effectively choke off the pipeline. You make it much harder for sketchy companies to access U.S. markets in the first place. It's a way to tackle a global problem with local enforcement.
Okay, that does offer some hope on the big money market manipulation front. But we need to shift gears a bit. Because while that's costing billions, these simpler, everyday scams are still evolving and hitting millions of people who aren't even trading stocks. And the core mechanism creating urgency, building trust, it seems to be the same, whether it's a stock tip or a fake email.
It's a perfect transition. Exactly. Market fraud might prey more on greed, but these everyday scams hit that same fundamental button, pressure. And they're still surging despite all the warnings. Phishing alone. The FBI tracked over 193,000 victims in 2024. Collective losses, over $70 million.
Phishing, still number one. What are the classic red flags people should immediately spot?
Well, phishing messages, emails, or texts, they almost always harp on one of three things, and they always demand immediate action. 1, they claim there's suspicious activity on your account. 2, there's supposedly a critical problem with a payment you made. Or 3, you must confirm personal info right now by clicking this link, that urgent tone. It's designed specifically to make you panic and click before thinking.
And here's that fascinating, almost counterintuitive detail the sources mention, the intentional bad grammar. Why would scammers deliberately use typos and errors?
Yeah, it's a really interesting and kind of depressing strategy. They apparently use bad grammar and typos as a filter. It weeds out the people who are more skeptical or pay closer attention. They only want to engage with the people who will click despite the obvious errors, because those are the folks deemed most likely to fall for the rest of the scam. It actually filters their victim pool for maximum efficiency. It's quite cynical.
Wow, filtering for the least skeptical people.
All right.
Okay, let's also touch on that really high-value fraud, the advance fee or 419 scam, the Nigerian prince thing. It's ancient, but still works.
It is ancient, the classic Nigerian letter. And yes, it still works, primarily because it targets pure greed. The promise of a huge fortune if only you'll pay a small processing fee up front. While it's old, it can lead to huge individual losses. About 7,100 victims reported in 2024, but the total loss was $102 million. That averages out to a very substantial $14,383 per victim.
Then shifting back to emotional pressure, you have the grandparent scams, exploiting family ties and urgency.
Exactly. The setup is almost always identical. Someone calls, pretending to be a grandchild in a panic. They need cash right now for some emergency. They're in jail, in the hospital, stuck overseas. The key elements are always urgency and secrecy. They'll plead, don't tell mom and dad. Why? Because secrecy prevents the one thing that stops this scam cold: verification.
And we have to assume, with the tech we have now, voice cloning, AI, these could get much more convincing, right? Making that panicked voice sound exactly like the grandchild.
Oh, absolutely. The underlying psychology is timeless, but the tools are getting scarily sophisticated. And beyond family, there are fear-based scams too, like tech support scams. Huge numbers there, over 36,000 reported in 2024. That's usually a call or a pop-up saying your computer's infected. They trick you into downloading software that gives them remote access, and then they're into your financial accounts. Related to that is scareware, those fake virus warnings trying to get your credit card details when you buy their useless fix.
And lastly, just for anyone who buys anything online, the retail and identity theft angle.
Yeah, those are constant threats. You've got form jacking, where criminals hack into legitimate shopping sites and skim your payment details without you even realizing it, or just straightforward fake shopping sites.
Yeah.
They use URLs that look almost right, like Amazero with a zero, maybe .net instead of .com. The goal is always the same. Grab your credit card info or trick you into downloading malware because you trust the brand name.
Okay, we've covered a ton of ground here. From, billion-dollar market schemes down to these very personal phishing attacks. It feels like the core defense is always going to be personal vigilance, but let's get really clear on actionable rules.
Right. Rule number one has to be the fundamental filter, the gut check. If any offer guaranteed investment returns, pre-approved credit you didn't ask for, miracle debt relief if it sounds too good to be true, if it demands fees up front, or if it pressures you for an immediate decision, it's almost certainly a scam. That time pressure is designed to shut down your rational thinking and verification process.
Okay, gut check first. What about the basic digital hygiene checklist?
Basics are crucial. Use strong, unique passwords for different sites and update them. Get real antivirus software and keep all your software updated, patched against vulnerabilities. And never ever give out personal or financial details, passwords, social security numbers, bank accounts to anyone who contacts you unsolicited. Your bank, the IRS, any legitimate agency, they will not ask for that stuff via email, text, or an incoming phone call.
And for those specific attacks, the urgent calls, the suspicious links.
Never click links in emails or texts you weren't expecting. Just don't. Go directly to the company's website yourself if you think there might be an issue. If you get one of those frantic grandparent scam calls, hang up. Then call another family member directly using a number you know is correct to check the story. Never call back the number the scammer gave you, and absolutely never send cash, buy gift cards, or wire money because someone is demanding it urgently and telling you to keep it secret. That's a massive red flag.
And worst case scenario, you realize you've clicked the link, given info, sent money. What's the immediate first aid?
Act fast. Speed matters. Immediately change passwords, especially for financial accounts. If you downloaded anything suspicious, delete it and run a real virus scan. Then contact the authorities. File a report with the Federal Trade Commission, FTC, the FBI's Internet Crime Complaint Center, IC3, and your local police. Reporting helps them track these operations and potentially helps others. Look, the core lesson here, it applies whether we're talking Wall Street manipulation or a simple fake email. Fraud works by building trust, often fake trust, and then demanding you act now under pressure. The modern threat is just so coordinated, often global, and absolutely relentless in looking for those digital and financial weak spots.
So the systems are being policed. The SEC is going after the bilge bracket, NASDAQ's raising standards, but it's clearly an ongoing battle. Your own vigilance is still the primary defense. Okay, here's a final thought for you to chew on, going back to that weird psychological trick. If fraudsters are intentionally putting typos in emails to filter out the critical thinkers, what does that actually tell us about how well basic digital skepticism is working out there right now? Is critical thinking maybe becoming rarer online? Something to think about.